S&P 500 Analysis August 24, 22. Nothing surprising. In the course of the quite impulsive sell-offs in the past few trading days, investors are again afraid of a total crash. Today we would like to take some of that fear away from you. Nothing has happened in the S&P 500 chart over the last few days that would have surprised us, since we had been expecting this corrective counter movement for quite some time. We have been communicating in our updates, since August 1st, that we primarily expect an interim correction in the region in the blue target zone, between 4221 and 4339 points, or the overlapping pink zone, coordinates, 4,305 and 4,375 points. And this should be the case. The mass index is currently processing almost perfectly. The course completed the corresponding wave number 3 in blue directly at the overlapping edge of the two target zones and later, as expected, triggered the counter movement in the form of the wave number 4 of the same color. The S&P 500 should now sell off a bit in order to complete the interim correction described in the lower blue target zone between 4096 and 3953 points, before our primary expectation should continue on the upside. As recently communicated with emphasis, we are now moving into regions in which the further course of the price will be decided. In other words, will the S&P remain in our primary scenario just described? Or would it rather prefer our alternative on the downside, which is still 40% likely to push through? In the course of this alternative route, the course would not scratch the curve within the blue zone, but would rather undercut both the support at 3,950 and at 3639 points again to reach the final in the turquoise target zone in the south, coordinates, 3597 to 3353 points, expand bottom of correction. In this course, too, we see the price climbing up again in the chart. In this regard, we would like to give you the following advice today. Although the implementation of the initially bearish alternative would of course be painful at first glance, it also has advantages. For this we take a look at the overall daily chart. From this you can see that in line with our primary scenario, price should have extended the low of the June 17th correction in the form of the turquoise wave number 4. Correspondingly, a wave number 5 follows here. Explicitly the also turquoise 5. Which is why an extensive corrective movement can also be expected in the upper zone of the same color. However, if the S&P 500 pushes through our alternative, the index would deposit the low of the correction in the form of the turquoise wave Alt 2. As a result, the course would only be in the turquoise wave number 3, which means the upward movement would extend significantly further and also longer before a more extensive correction should occur here as well. So the S&P 500 continues to deliver nothing surprising. On the contrary, it has recently worked through our primary scenario with extreme precision. So the counter movement in the blue target zone should be completed imminently. However, we must not lose sight of the alternative in the south, which would bring us even deeper lows, but would probably also result in an even more bullish trend. Thanks for watching. If you want to see more indexes being analyzed, please like and subscribe.